right? Are you watching from Lagos? Are you watching from outside Nigeria? Do let me know where you're watching from, guys. Let me know. Let me know. I'm very much interested in knowing where you're watching from. Okay? Okay, let me know where you're watching me from. Are you okay? Watching from? Let me know where you're watching me from, guys. Where are you watching me from? Where are you watching me from? Okay. Yeah. Let me know where you're watching. Okay, good. I can see Diana from South Africa. Fortune from South Africa. Um, yeah, Frederick from Edo State. Abe from Abuja. Simeon from Lagos. All right. Faith from Oyo State. All right, all right, all right. So I see today is going to be a great one already, right? So let's dive in straight into the live session for today. So, but then I will be starting with Euro USD, analyzing Euro USD. But before I round up, please, if you want me to, whatever currency you want me to analyze, do well to drop it on the comment section so we take up this opportunity and kick off. All right. So let's go look at trading opportunities that we have on Euro USD. So first we start with the on the higher time frame. All right. Let's look at what we have. Okay. Yeah. Good, 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 good. Excellent. So now we're able to identify the levels of support and resistance. Okay. So let's look at what is happening on this is the monthly time frame, right? So we can see some rejections coming in, some buy pressures coming in. So let's go to the weekly time frame. All right. So let's see what is happening on the weekly time frame. So as you can see that currently price broke out of this level. Price broke out of this level. This level had been a resistance turn support level, right? So then it was a support level here, and finally it was broken. Okay. So of course, when there is a breakout, there is 80% chances of a pullback. All right. And that's what we saw here. So a pullback up to this level. Then let's look at what would happen next. So look, if you look closely, for those who did not see through, okay, this is what I'm talking about. So you can see what price did here. Let me see if I could get something to draw. Okay, price came down. All right, went up, came down again to touch that same level of support, went up, came down again, could not break through this same level, was pushed up, okay, then came down, okay, close to that same level, was pushed up, then came down to that level, was pushed up a bit, before then there was a final breakout. All right, now there is a final breakout. Now there's now a pullback. Okay, now so what next from this level of pullback? That is what we want to look into, and then we take advantage and take opportunity of that trade. Okay, so let's go down to the daily time frame. So from the daily time frame, we would be able to see what is happening on each day of the week, or what has happened. So the interesting thing about the chart is that the chart helps you to see what has happened, what is happening, and what will happen. All right. So you use the information of what has happened, okay, and what is happening to predict what will happen. All right, because you wouldn't know what would happen if you don't know what is happening. All right, stemming from what has happened. So what has happened and what is happening tells us the future of what will happen. All right, that is where you know analyzing coming in, forecasting and predicting the market, because of course we have datas, okay, datas that are stored in candlesticks, all right, telling us market direction. So with these datas we would now be able to determine, all right, the future. Why? Because these data contain what has happened, what is happening, and what will happen. All right, good. So let's take a deep dive. Huh? All right. So good. So you look at this now. This is daily time frame. So we can see that on the daily time frame there has been a consistent fall in price. All right, there've been a consistent fall in price. Okay, so we can see here that there've been a consistent fall in price. All right, and then we're able to identify that this level was a level of support, okay, which was later broken, and now there is now a retest. So after that, after a retest after a breakout, all right, continues leads to continuation of the market direction. So we are looking out for a continuous what? A continuous downpour. Okay, yeah. So if you look closely, see what market is doing. Hey, sorry. See what market is doing here. Can you see that? See what market is doing here. All right. So this is the pullback region. This is the region where price pulled back. I'm coming. This is the region of the breakout. Okay. So this is the region of the pullback. This is the region of the pullback. There was a pullback here. Okay. There was a pullback here. Okay. Now that we have a pullback, okay, you now discover that you would see that rejection signals are up here. All right, you see the wicks indicating sell pressure. All right, the wicks are indicating a sell pressure on the market. All right, so the after the pullback now, we look out for what? A continuation in the market direction. All right, now the continuation in the market direction tends to most likely it has a higher chances of touching the next support level. All right, the next support level can be, let's identify the next support level on the okay, on the monthly time frame. Good. This is where the next support level will be. Okay, So let's go back to the daily time frame. So you can see now. Good. We can see clearly now. So if you want to swing the trade, all right, you can short the market. We would short the market here and put our take profit here. If you want, that's if you want to swing your trade. Our take profit would be at 0.95946. Okay, that's where our take profit would be. Let me indicate it as TP, take profit. Okay, this will be our take profit. Okay, now our stop loss would be, if you enter here, then stop loss can be above, yes, this resistance level. All right, so you can have a stop loss here. $1.05650. Yeah, so you can have a stop loss here. All right, this shows that you factored in risk management. All right, it's important one factors in risk management, because that's very important in trading. Okay, good. Now, for those who are intraday traders, let's see if we have a short-term opportunities. All right, because of course, if you are going to swing from here to here, it will take days, which means you have to wait for days and weeks. Okay, but for intraday traders who love to catch in on short-term opportunities, you can always come to the lower time frame. All right, come to the lower time frame. You see what is currently happening on the lower time frame here. If you look at this region, let me get my, oh no, okay, you look at this region, there is just one thing you have to wait for on this region here. All right, and that is price breaking out. That is price breaking out. So let's change to the line chart so you can see the contours clearly. Okay, good. Okay, good. All right, so we can see the contours clearly. So we'll go back to okay, good. So now, once price breaks out of this level, okay, once price breaks out of this level, all right, then you want to short the market, you want to take your profit here, you want to set your stop loss here. Okay, once price breaks out of this level, you want to sell, take profit here, set stop loss here. All right, good. Let's look at what we have on the 1 hour time frame. Excellent. So if you look closely at the 1 hour time frame, you discover that for the last 1 hour, price has been ranging in this box. All right, if it finds direction to the downward side, then you are prepared to sell, take profit here, set your stop loss here. All right, then if it breaks out, if it bounces back, and breaks out above here, then you want to reposition yourself. Okay, good. you want to reposition yourself, all right, and buy. So when you buy, you are looking at your target here as your take profit level, and when you are buying, when it breaks out from there, you are buying. Then your stop loss would be here, like it would be inside the what's it called, the support level of the ranging candle. So you can see it here, of the ranging chart. All right, see the support level here. Okay, good. Let me see what you guys said we should, the currency we should use. Right, someone said we should analyze gold, right? Okay, so let's look into gold. I'm sure we got this right. Good. Let's look into gold. All right. Okay, good. Now, let's look into gold for some interesting opportunities. So, if we are looking into gold, number one, when we want to analyze the chart, we start from the top to bottom approach. All right. We use the top to bottom approach. All right. Top to bottom approach. So let's start from the top to bottom. From the top to bottom. Oh yeah. So of course we can see that over the years, say from 2016, the gold market, has seen a sporadic movement. All right. A sporadic movement to the top. Okay, now let's analyze, let's look out for the opportunities we have on the gold market. All right, good. Let's identify the levels of support and resistance. Let's identify key levels of support and resistance on the monthly time frame, and then we look to enter on the daily time frame for swing traders, and on the 4 hours 1 hour time frame for intraday traders. All right. So let's identify this line chart. Okay. Good. Yes, top to bottom approach. Let's go back to candlesticks. So here we are on the monthly time frame. If we now go to the weekly time frame, so why are we going from the monthly time frame to the weekly time frame? So that's the top to bottom, which is the higher time frame to lower time frame, is so that on the higher time frame we can see, on a broad base, what is actually happening. Okay, on a broad base we can all see the chart now. On a broad base we know we are seeing what is happening. All right, when we move closer into the lower time frame, it's more like we are zooming in. That is, we are zooming in to see into the details, to see clearly. That's why we are moving in to the lower time frame. So let's go to the weekly time frame. Good. So you discover that on the weekly time frame now, good. You can see what price has been doing here. Let's mark it up. Good. You can see what price has been doing here for a while now. Good. So this level here where price is currently at is a support level. All right, is a support level. Okay, that's where price is currently at now, is a support level. Okay, now there are two things that we would watch out for here. If you are a swing trader, price would have to break out from this direction. So if price breaks out below, okay, then you want to short. But if price breaks out above, then you want to long. All right. However, you can also take advantage of this gap, because before price can move from here to here, you could also leverage and make profit from it. But then how do you see into what that gaps occupy? All right. For you to see into what that gap occupy, then we zoom closer to at the lower time frame, which is the daily time frame. All right. Good. So now let's go to the daily time frame. Don't forget, we are using a top to bottom approach. Okay, it's not confusing because you are coming from a higher time frame to a lower time frame. So it's just you trying to zoom in clearly. So you take an image now, or you open a PDF, and you could see that there are details on this PDF, there are informations on this PDF, but you can't see clearly. So what do? You zoom in, right, on the PDF, so you can see details, the letters and alphabets written, plainly on the PDF, okay, on the document. That is how top to bottom approach looks like. You are coming from the higher time frame and you are zooming into the lower time frame, because in the lower time frame, as you go lower and lower, you are able to see details. All right, look at what we are doing now on the daily time frame. Now we can see details of what is happening here. Okay, if you look closely, look at this place very well, look at this region very well, you know it's a very solid region to watch, because of course price could reverse, okay, and then a continuous fall in price. Gold will continue to fall to $1,500. Okay. However, you also need to wait for a confirm. If you want to go bullish, you will wait for gold to break out of this resistance level, because there's a resistance level here. Though it's a minor resistance level, all right. Though the resistance level is minor, but you can see that there's a resistance level here. So if it breaks out of this resistance level, then you want to follow the trend up to this place and take profit, because of course it can from here either break out, okay, which you never know, or pull back and start falling again. Okay, so but at this point now, we are good to saying we are seeing a bearish movement on gold. However, you need a confirmation. I tell you, it's not about how many positions you enter, it's about how profitable just one single position can earn you. And to be able to analyze and get in on that one single position that would put you on the right track comes through patience and waiting for your analysis to play out. Once your analysis play out, then you can hit the nail on the head. Okay, so let's go to the lower time frame, which is 4 hours, to see what is clearly happening. Let me delete all these lines. Good. So you can see that on the 4 hours, we have a bullish engulfing candle. Can you see that? That on the 4 hours we have a bullish engulfing candle. You could see this. See this candle now. See this bullish engulfing candle. Why do we call it bullish engulfing? Because it engulfed the previous bearish candle. You can see the bearish candle here. Look at the bullish candle. This one now is taller, bigger, and taller in size than this one. All right, that is a bullish engulfing candle. Okay, so it signifies something. All right, it signifies a bullish momentum. So the question now is it going to be a long-lasting, a sustainable bullish momentum? All right, or a short-lived bullish momentum? Okay, you can only confirm that if price breaks out of this region. You want to wait to see price break out of this region. So if price breaks out of this region, then you want to buy. Okay, you want to go bullish. If price reverses back and break down below this region, then you want to go what? You want to go bearish. All right. Yes. Good. So I hope you guys are following. So if you are following, let me know in the comment section. Let me know in the comment section if you're following. All right. Yeah, so when there is a situation where you are not sure what is going to happen, like what we have here now, and we are waiting for a breakout, right? And somebody said, oh, how many candlestick will we wait for before we enter for either a long or a short? All right, so you look at this scenario now. We are going to wait for a candlestick that will break out, okay, and close. So the candlestick must not only break out alone, the candlestick will break out and close. It must close. If it doesn't close, if it doesn't close, let me give an example. So if this candle here now, all right, closes and another one forms, that one must close outside the breakout line. If it closes outside the breakout line, which is if the breakout candle break out of this particular line now and closes here, okay, we will now look out for the next one. All right, since this is a 4 hours candlestick candle chart, all right, we'll look out for the next one. You don't jump into a trade immediately there is a breakout. All right, and don't beat yourself when you lose an opportunity of entering a trade earlier. There is always opportunities in the market. All right, though emotions will make you feel you should have entered earlier, all right, but because you needed a confirmation, your confirmation is more important, because if you enter the trade and it goes otherwise, you will still feel the same pain that, oh, I could have just waited. All right, so imagine there is a breakout of this level now, so you will wait after a breakout candle, because I said there are 80% chances that there will be a pullback. So now you will wait. So if the next candle that opens beside it, all right, closes above the breakout candle, then you are prepared for a buy. Okay, but if the candle that closes above it, the candle that opens after the breakout candle now comes down here and close below, then I want to tell you to run. All right, don't buy. Why? Because it has gotten back into that level that it previously broke out. It recently broke out from. So which means that breakout candle is said to be a fake breakout candle. I don't know if I'm passing a message now. That breakout candle is said to be a fake breakout candle if the next candle after it closes below it. All right, so let's take a bearish scenario. Okay, let me delete all this. I want to show you guys something. So let's assume that those green candles have not yet been formed. All right, let's assume. Okay, and okay, like now, so let's assume these green candles now have not yet been formed. You know, we mark out this level. Okay, we mark out this level, right? Now, if having marked out that level, this bearish candle now breaks out, all right, if the candle now breaks out, you will not want to jump on the trade and start selling off. Okay, you want to wait for the next candle. So if the next candle that comes after it, if the next candle that comes after it now, okay, now opens, what's this, pardon me, if the next candle that comes after it now opens, okay, what's going on, excuse me, let me clear this stuff. Okay, I think some sheets is here. All right, so let me delete everything that is here. Good. Okay, we have this. So like I was saying earlier, if we have a breakout candle here now, all right, now, and the next candle that opens closes below the breakout candle, then this is a confirmation that you can sell. All right, that you can sell. Okay, it's a confirmation that you can sell. But if this candle did not break below, if this candle did not close below, okay, if the candle close inside, reverses back and close inside the level it broke out from, that is a fake breakout candle. And that is why you want to be very careful to patiently wait to know which candle is a breakout candle and which is not. All right, so that is what you are looking out for. Okay, good. So what do we do now? We wait to see what gold does in this region. If it breaks out of this candle and after the breakout candle, the next candle closes above it, then we are good to go buying. If the candle breaks below and the bearish breakout candle closes below it, then we are good to sell. All right, good. So what else do you want me to analyze? What currency pair should we analyze, guys? What currency pair should we analyze? So I want to take one currency pair, we analyze it, and then we're good to go. Okay. Yeah, so I'm waiting for you guys to tell me what currency pairs do you want us to analyze. Pounds USD. We've done Euro USD. You can watch it after the session. All right, let me quickly answer this person that says, which time frame is the best time frame to place the trade? Okay, like I always say, there is no best time frame. Okay, so you just have to identify what type of trader you are to know what time frame works for you. Okay, I know guys that swings their trade for months, 2 months, they still have an open order. All right, I also know people who, they're scalpers. They want to just get in and get out immediately. They don't have time to waste. I also know another who would love to trade within the day. All right, they only trade within the day, within the day. So they use the 4 hours and 1 hour candle. The scalpers use 30 minutes, 15 minutes, 5 minutes, 1 minute time frame. All right. Then the swing traders use the monthly, the weekly, the daily, all right, to swing. Okay. So yeah, let's look into GDP. A lot of persons have suggested GDP. Great. GDP. Okay, GBP rather. Look at me. Cool. So we apply the top to bottom approach. Let's have a broader view and then have a clearer view. All right. Okay, so obviously we can see that the market has been on a bearish momentum. Yeah, bearish momentum. And good. So we change to line chart. Why do we have to change to line chart? So that we can be able to identify the edges that we need to place our lines and be able to identify the right spots for the resistance levels and the support level, guys. So this is the monthly time frame. Now let's take it to the weekly time frame so we can see, closer and closer and closer into what is actually happening. So guys, we're like, what is going on with GBP? Okay, so look into it very well. We identify a range. Okay, a range. Market is ranging. All right, market is ranging. Okay, good. And then from the broader view, all right, from the broader view, I can see that there is, if you check this place, there was a range as well. Sorry, I have to. Shit. Okay. Good. Let me change the color. Okay, good. So you can see that there was a range here and then price broke out, like the bearish breakout. Okay, let's zoom closely. Let's look into what happened here so we can see how the breakout occurred for persons who still want to understand how breakout works. Do you see that? So there was a breakout, a little bit of pullback, all right, and then price kept going below this breakout level. Okay, and that's where we are right now. Good. So what do we expect on this spot here? Because this is from a broader view, you can see that the market is in a downward direction. Okay, a bearish steroid, bearish momentum pouring in. So we have to take a look at the lower time frame, one daily time frame. When we look at the daily time frame, so you can see now what the daily time frame is telling us. Okay, yeah. So we can see what daily time frame is telling us. So there are a few things we'll need to see here. All right. So because, like I said, let me just give us a tip on this. Like, this is a tip now. You spot this. First, footprint. All right, the first footprint. Oh, like I'm seeing more footprints there, so I'll just put first. There are several footprints here, so let me just remove this and use the shape to identify them. So you can see here we have what's this? Okay, here we can see first price footprint. Another. Good. So we can see that price has touched this level, this particular level, more than 3 times. All right. So the more price touches a particular level consistently, okay, the weaker that level becomes. The more price touches a particular level consistently, the weaker that level becomes. So you see this level now, first touch here, you see second touch here, you see third touch here, you see fourth touch here. You know, the fifth touch might just be the area where price would break out. All right, because the more price touches that level, the weaker that level becomes. Okay, so we are to watch after this level where we have the fifth touch. Okay, the higher probability that price would break down below and the downward trend would continue. Okay, good. So let's go to the 4 hours time frame. What is in for us on the 4 hours time frame? What is in for us on the 4 hours time frame? So on the 4 hours time frame now, we can see that price is still very much directionless at this level. All right, you can see if you look at it now, price is just in between this level, in between here and here. Okay, so you can see price is just in between these levels. So now we need to look out for a movement outside this box. All right, that's for you who want to take advantage of the short-term price movement. If you are looking for a swing trade, all right, you might look out for a bearish position. All right, so that if you are looking for intraday trading, you might want to observe how price reacts at this level. So if price breaks out of this level, then we want to you want to wait for a retest, okay, before going bullish. If price breaks down below, then you want to wait for a retest before going bearish. All right, that is one way you confirm your trade. Okay, I tell you that professional traders and profitable traders don't jump on every trade. They wait for their setup to be what? To be to be aligned. Exactly. They wait for their setup to be aligned. So the things they watch out for, the things they look out for, it's already there. Okay. Once those things are manifested, they shoot out for it. All right. Yeah. So you get, someone said, how do I start trading? You get to start trading by start trading. So you open the Octa FX, go to the Octa FX website, open an account, download the app, sign up on Octa FX, MT4 or MT5, and get started. Watch our videos and start training yourself, start learning, okay, with the demo account. But I tell you that while I encourage you to learn with the demo account, I also encourage you to learn by trading with real money. All right, because that is the point where you get to train your mind. All right, so it's a different thing when you have the skill, the ability. It's a different thing when you have the mental skill, and the mental skill comes into play when you have funds involved. All right, when you have something to lose. All right, that is where you are able to build up your mind to engage with your trade. Yeah. So I believe you guys have gotten value so much from this session. So if you have any question, let me know in the comment section. Someone said marketing site told us to sell today. Someone said, can you analyze the Forex market? Yeah, of course you can analyze the Forex market on your phone. All right. So there's an app that works on your phone. There's an app that works for your PC and the likes like that. So you can always analyze from anywhere, from your phone and from your PC. So there are people who do the analysis on their phone. All right. So you can, if anyone can. All right. So you could. Yeah. So someone was like, okay, so how do I start trading? I've said that. So you get started by getting to trade, sign up with Octa FX, download the app, open a demo account, start trading. However, I encourage you to fund your account so that you can always learn to improve your mental engagement with the market, because of course it now involves real money. Okay. Yeah. Any question? Reason for okay, someone said reasons for the downward trend these days. Okay, so of course you cannot determine what direction the market should go to. Okay, by trying to determine what direction the market should go to is like determining what is in the mind of everyone. All right, and because you don't know what's in the mind of everyone, some persons might be telling you they are buying while they are selling. Some persons might be telling you they are selling while originally what they are doing is they are buying, they are stacking up. Okay, so it's all about human behavior. So what you see here is a data, all right, showing human behavior. So if you see the market go up on the pounds dollar chart, it's telling you that people, investors, institutions are getting more interested in the pounds than the dollars. So it's about human behavior. If the market starts going down in the direction of the dollar, then it's telling you, it's an information, it's a data telling you that what the institution, all right, are now preferring the dollar to the pounds. Okay, so these are the things, it's the accumulation of all these decisions all over the world that we can see on our screen right now. All right, so what you are seeing here is human behavior, all right, playing a role, how human behavior react to the macroeconomics, as the economic agents, inflation, interest rate, unemployment, what have you, pandemic, okay, goods and cost of goods and services, all those things, human behavior, how they respond to it. That's what you are seeing on the chart here. So you cannot determine what human behavior should do, all right, but you can always predict what would be the next move, what would be the next direction of the market, in the cumulation of all the datas that you have. All what we have here are datas and informations of happening in the market. All right, good. Someone is saying what will I desire on that now? Am I buying or selling? So yeah, like what I said, the movement of the price here will determine if you are buying or selling. All right, so you can see that price is ranging. So I want us to be patient. If price breaks out, there will be a pullback. All right, now if that pullback did not close inside this ranging chart, this ranging line, all right, then it's a pullback to watch. But if it closes inside it, then it's a fake pullback. Okay, it's a fake pullback, and you don't want to trade a fake pullback because it's a trap. So when the market goes down, all right, and then and it pulls up back again, cool. Once it moves back and closes outside the breakout line, all right, then you can just buy because it's going to move up. Same thing applies if it breaks down below, okay, and pulls back a bit, then you just want to sell. All right, so either direction, now you are waiting for a breakout, and the candle to close outside those resistance and support level. Yeah, Armstrong said the analysis is great. Thank you very much. So all appreciation goes to Octa FX for making this very much available to you. You're not paying so much. You're not even paying for it, but then you're getting so much value. All right, it feels so great. Okay, yeah, thank you very much. I can see Ferry said I will do so. Thank you at Octa FX. Great, that's what we want to hear. All right. Yes, guys, so I believe you guys have gotten so much value from the session. Don't forget, every Thursday we are always here giving you these values, giving you this insight, giving you this knowledge. All right, do well to subscribe to Octa FX, and don't only subscribe, click the bell, the notification button, and be the first to be notified about our next event. Okay, see you in our next event. See you next time, guys. Take care.